Welcome back. You're watching this special broadcast, the curtain raiser to the 11th Axis Capital India Conference, which kicks off tomorrow. Well, we've got another set of experts, as promised, from Axis Capital. We have with us Ashish Nigam, who is the Deputy Head of Research. We also have with us Chirag Nigandi, who heads investment banking, and as Dharmesh calls him, the IPO champ. Did I get that right? So before we talk about IPOs and fresh paper supply that the market could look at this year, a little more, Ashish, on the sectors as well, and what is really happening. We were talking about this portfolio churn and the search for value, because growth stocks have anyway multiplied. We know how expensive the valuations are.
Yeah.
So when you look at, for instance, IT, and the sudden buying that's now beginning to emerge on IT stocks, do you see any fundamental merit or anything changing behind that beyond maybe the sentimental effect of the rupee?
So it's two things. So firstly, you are seeing some stability return in terms of the outlook. So you see the outlook recently in the Q2 results. There is a resumption in growth picking up, at least in the next year. And the rupee is a big factor. I mean, so today, given how crude prices have behaved, there could be sort of implications on the rupee, which is a very good way to play it is the IT space. And valuations for a very heated market, valuations on the IT side are actually below average, below the historical mean. So it's not a valuation trap or anything what people have been talking about. It's actually pretty reasonably valued.
Is that the case for pharma as well? Because again, it's been very volatile. Yesterday we saw Lupin cracking 17% on the back of this US FDA warning letter. It's been very stock specific though, but still, as a pharma, as a space, do you think in terms of valuations and in terms of growth, it's a safer bet now?
It is also, so we're very selective in pharma. So we don't like the US generics. What we do like is the domestic and the specialty plays. So the US generics have all the issues in terms of US FDA and pricing issues, consolidation, etc. But in terms of the domestics, we actually see structural growth despite the regulatory issues. So we are sticking with the domestics and the specialty plays in pharma. And valuations in pharma also are actually pretty comfortable. So what people have been doing, you asked about valuation, with so much of liquidity like we've been seeing, people are just buying visibility and selling lack of visibility.
Absolutely.
So the stocks you like are getting more expensive, the stocks you don't like are getting cheaper. But at some point that trade reverses. That could happen actually in FY19, because FY18 also is sort of this trade playing out. Maybe FY19 and 20 is when this could recover.
That's exactly what we were discussing just before the break, whether this portfolio reset is going to happen in this coming year. Where does that leave consumer? And I believe you do track autos very closely, and that's obviously a consumer-facing sector directly. Now, valuations here also are not cheap when you're looking at an iSure or a Maruti, or if you're looking at staples for that matter, if you're looking at a lever. Where do you think some of these known, tried and tested plays will be as we look at next year?
So I think from a cycle point of view, so let's say in autos, valuations are higher than historical averages, but that's not the right way to see it. I mean, there's a whole change happening in the way people are seeing autos. It's a very good way to play consumer in India. It's not a very expensive way to play it compared to staples. So, the view we're getting is that autos are a better way to play consumer than the actual consumer names. They're clean companies, better return on capital.
But having said that, since you track it so closely, October, I mean, we obviously saw that little bit of a pull down because all the festive buying had happened.
Yeah.
Just a 1 month issue, you think the story just continues?
So what you have to actually see is October and September combined versus October and September of last year. Because last year you had the festive season was a little delayed. So October of last year was very strong, and this year you had some festivities in September as well. So if you adjust for that, the growth has been 8-10%, which is not bad. And I think in autos, the trend that we've actually seen and the directionally what we like is that going to the emission norms, the safety norms, the auto ancillaries can outperform the OEMs. So the content increase that the auto ancillaries have is actually a cost pressure for the OEM. So the auto ancs are the better way to play the sector.
Dharmesh, you briefly spoke about crude as a bit of a risk for equity markets, at least in the near term. From a domestic point of view, what sort of risk you foresee? Now people have started talking about general elections and some state elections as well. Is that going to be a bit of a concern or a bit of a roadblock in the near term?
Yeah, that will be a concern. In fact, people are watching the Gujarat elections very closely. Exactly. And that actually will be the next stage, whether the markets correct based on that result, or in fact, if they win again in a very emphatic way, or even in a good manner, markets may again go to the next round of rally. So yes, there will be some political tensions going around, and people will start guessing what's going to happen 2 years down the line. But you have to live with that volatility. That's what I said. The markets are up 30%. I think so it's not fair for any investor to expect the markets are going to give you that kind of return almost every year. So I would say have your expectations set in a reasonable manner and buy stocks where you know your downside is limited. So in fact, if something goes wrong for a short period of time, you can still buy into that fall and be comfortable and sleep over those stocks for another 1 or 2 years. Because the long-term story in the next 3 to 5 years, India is a great bet. And I think so these are the opportunities which you get to buy into those high quality stocks which you missed out in the last leg of rally.
Correct. Dharmesh, you know, the one big argument for this bull market to continue is the domestic liquidity. Is there a complacency now that people are just saying that, you know, this is just going to continue? You have next to you, you know, the guy who's bringing so much of paper, and probably that will soak a bit of liquidity as well. Is that going to be a concern? Too much of paper coming into the market in the near term?
I don't think so. I always tell this to all my clients and to my friends and all. The supply brings in demand. It's not the demand brings in supply. More the supply, in fact, you will get more the demand. And we have seen this in last 1 year. We're going to see the next year. Yes, it will all depend on what valuations people are going to come at. But if the valuations are reasonable, I believe there is enough appetite for people to lap up whatever Chirag and his team and my team brings in.
Correct.
I believe that will be definitely be lapped on. It's very key is what valuations they come at. And more important, as I said, where is the avenue of investing for the domestic investors? Real estate is not a great play. And, in the short-term period, gold is not a great thing. And even how much money will go into gold? So yes, you have started seeing jewelry and all of them started doing well because people have started now going from equities as equities have risen to jewelry segment. But still, the amount of liquidity which is lying with the banks, that has to move into equity. So maybe the SIPs continue to wonder what they have done in the last 1 year.
Nimesh, I was looking at the AMFI data for October just yesterday, and we said, oh, there's a dip in October. What's the dip? It's still 16,000 crore rupees. That's actually come through. So what are we even talking about?
So in fact, we are going to a different phase of our life. We've never seen this in the career. So basically, nobody's able to fathom this. I think that this may be the new reality, that the domestic liquidity may continue for a longer term.
Yeah, I mean, and I can share that. I mean, given that I do track the personal finance space fairly closely, the kind of queries we're getting, I mean, savers, even retirees are looking at equity now.
Absolutely.
People have figured out that the fixed deposit is not going to run it for you for the next 15, 20 years of your life.
It's a factor of the base that we start from also, right? If you thought about a couple of years back, every market expert was coming and telling you about how this actually needs to move to equities. We've seen a sliver of that, and we now think that, you know, we're rushing to end it now, saying, you know, is this... the other part, you know, to add to what Dharmesh was saying is if you think about the kind of paper that is coming. So while we just look at it, while we look at this as just saying there's a whole block of paper, I think more importantly, you look at the quality of the individual companies that come to market. I mean, companies like Mahindra Logistics or Godrej Agrovet that have come from groups that are so reputed that have come to market only after maybe 10 years. So while that might add to the total number that actually gets raised in the year, the fact is that these are newer businesses. Insurance was not available as a play for investors maybe 6 months or a year back, right? Same way logistics, how many companies are in the logistics space that are in the investable framework for people?
The choice between buying a new business, I mean, maybe it's an AMC, we've never had these businesses to own and participate in, which is happening now. Insurance, as Chirag mentioned, the AMC business. Or simply just stick with what you know, stick with banks that are doing well, stick with maybe consumer names. What do you think is going to be the big theme that plays out as we look at least the first half of 2018?
See, the investors become also more smarter. Earlier, people just used to blindly invest in the stock markets. Thanks to channels like yourselves and guiding investors what to do, people are dividing their investment portfolio. Some of them is going to mutual fund, some of them is going into IPO, some of them is going directly. So even the investor actually is now hedging his bet properly. So in fact, all the three segments have started receiving money from the investor. So I wouldn't say one segment is the best way to do it. It all depends on the capability of the investor to understand stock markets. If he's not understanding, he's going through the SIP route, which earlier was not possible. Now he's smart enough to do that. IPO is a straight lottery kind of a game right now, they think, and they're buying to do that, and the allocations are not that large by which they worry about what's going to happen. And the third part is individual investing. They're becoming smarter to understand what are the good stocks to buy. So I think so it's a golden period for investing in India, especially for the investor education, which all the mutual funds, bankers like us, brokers like us, were trying to educate investors. I finally think that time has come where investors become smarter.
Any particular sectors that have stood out for you, or when you're looking at the pipeline in the near future, any particular themes that might be sort of worth a look at?
So right now we are seeing growth more in, let's say, in banks. So at least this year. So in FY18 we're expecting growth to be around 10%, which is more, it's more back-ended. So you've had lowish growth in the first half because of the GST transition. In the second half, the transition wears out, and plus the base of last year is very low because of demonetization. And with that, you're actually seeing sectors like autos, banks, FMCG, global commodities, we had metal and oil and gas contributing. The good thing is that in FY19, there is actually broad-based growth.
Completely take your point, and I think that is the inflection point. I don't know if Q2, Dharmesh, actually, why don't we, end on that? So, do you think Q2 has been that inflection point that we've been all waiting for with respect to the real numbers, corporate earnings?
A bit, but I think so because of the GST impact, actually you're going to see much more coming in the next few quarters when things have stabilized. Because of GST, a lot of sectors have suffered, but I think so it's next 1 year. See, please understand, India had two shocks. One was demon and GST within almost 10 months. Correct. No other country in the world would have taken the shocks the way we have taken it. So I believe the next 1 or 2 years for earnings and overall business environment, that will be more bullish than what you have seen, because those concerns will no longer be there.
So what is your advice finally to people who are still slightly left out of feeling, oh, I'm not quite into this? Maybe they're hoping for this correction. Will it just not come? Is it going to be a 3% correction? That's it, you won't get another opportunity, so might as well get in now. Or do you think there could be a chance, whether it's oil, whether it's some other trigger, that you finally get that dip and then you buy low and ride the wave?
I never say never. So I wouldn't say they wouldn't get it or they should do it now, but I think so they need to understand the return expectations has to be reasonable. They can't expect the same returns which was there earlier. Markets are in a little volatile stage right now. I think so one has to be a little bit cautious when he's investing and smart. So my advice would definitely be invest at every interval rather than at one go. And there's a fabulous scheme by mutual fund they call SIP. Just keep on buying through them and you're lucky.
Okay, all right, gentlemen, we're going to wrap it up on that note. Thank you very much for your time. Great conversation, and we wish you all the best with the conference as well. Thanks very much. That's it on this special. It's a wrap from Nimesh and myself.